Welcome to our corporate accounting class. Today we are going to solve problem number 7 for balance sheet. Actually, first part of this question we have already solved, that is preparation of a P&L account. Now I am going to tell you how to prepare the balance sheet. See, mind it carefully that balance sheet should be prepared as per schedule 3 of new format. In this schedule 3, we have to take this in the form of the statement. First statement is P&L, that is a profitability statement. Second statement, which is called position statement, preparation of balance sheet. Already we have prepared the profitability statement. Now it is position statement. See, let us see one by one. Okay, take problem number 7 from your text. See, in this, the first one item, which is called plant and machinery, 15 lakhs. That amount of plant and machinery is a fixed assets. Technically speaking, in new format, we should not call that as the fixed asset. It is non-current item. Okay, so under non-current assets, we have to take that amount of plant and machinery. See, here it is given as plant and machinery 15 lakhs. Just you have a look on that right hand side of this workings. The next item is premises. That comes to 16 lakh 50,000. That is also taken under non-current item. Then furniture and fixtures 85,000. That furniture and fixture, that comes to 35,000. Sorry, 35,000 is taken under non-current assets item. Then we are having another one item, that is interim dividend paid 1,87,500. Please have a look on that notes, that is that bottom of that problem, bottom of that solution. We are given with the interim dividend. What does it mean? See, general reserve surplus, then that is P&L account, and then minus interim dividend. See, basically you know very well that dividend is paid out of profits. It should be deducted from P&L. So P&L account minus interim dividend of 1,87,500. Accordingly, we have taken. Then subscribed capital of 20 lakhs. That should goes to the schedule number 1, share capital. And also you should keep on mind one important information in this question. It is given as calls in arrear 37,500. That amount of calls in arrear should be deducted from share capital. Okay, what the amount of subscribed capital you are having 20 lakhs minus calls in arrear is given in the question. So we have to deduct the calls in arrear. So 37,500. Balance is what? That is, now we have to take that amount of 19,62,500 as share capital. Okay. Then surplus account. What is that surplus account? Surplus account we are given with more specifically surplus account within bracket credit balance. What does it mean? That amount is a profit. Okay. If it is a favorable balance, if it is a profit, it looks like this. Okay, that should be taken as surplus in schedule number 2. Normally reserves and surplus, on that point B is surplus, point A is reserve. Here also we are given with the general reserve 1,25,000, then surplus, that amount of surplus 72,500 we are taking in that next to general reserve 72,500. Okay, then debenture. Debenture is taken under long term borrowing. Normally, you know very well. Share capital is a capital, debenture is a loan amount. Okay, so that debenture is, that amount of debenture is 15 lakhs. It is non current liability, and specifically it is a long term loan. And the amount of debenture, have a look on that problem. 6% debenture. 6% debenture. What is the meaning for that? The prefix attached with the debenture is interest rate. Okay, 6% debenture is interest rate. Accordingly, we are taking 6% debenture is 15 lakhs. That should be in liability side of the balance sheet. But at the same time, you please put a point on that item. Why? Because since the interest rate is attached with that point, 6%, that may be there may be the chance of providing the interest. Okay, as per the adjustment given in the question, we have to take that. Right. Then sundry creditor, bills payable. These two items are, very well. Bills payable and sundry creditor are current liabilities. Very well, we are seeing that current liability in liability side of the balance sheet. Then sales go already taken in P&L. General reserve 1,25,000. Again, you refer that notes at the bottom of the total. 1,25,000 is taken for general reserve. Then coming to the adjustment. First point, depreciate plant and machinery by 10%. What is that? Depreciation should be provided. You know very well, as a accounts student, one aspect should be in balance sheet, another one aspect in P&L. Okay, here for depreciation, it is qualified only for fixed assets. Depreciation, fixed plant and machinery is 15 lakh. 10% depreciation should be taken. That 1,50,000. One effect already we gave in P&L. Another one effect should be in this side. That is in asset side. Okay. A non-current item, plant and machinery. From that we have to deduct the depreciation 1,50,000. Net value of that plant and machinery is 13,50,000 we have taken. The same is shown in the main part of the balance sheet. Okay, then next another one next to depreciation. Another one is to provide half year interest on debenture. This is what I already instructed. Debenture is given, 6% is the debenture rate is also mentioned. Then for a year, value of debentures 15 lakhs into what is the rate? 6%. That value that comes to 15 lakh into 6, approximately that comes to 90,000. Right? On that, provide depreciation, provide interest for 6 months. So 90,000 by 2, 45,000 is interest on debenture that should be provided. Okay, and that one is taken under other current liabilities. Right? So another one is bad and doubtful debt. You know very well. Bad and doubtful debt should be deducted. One effect should be deducted from debtors. And another one effect already we gave it in the P&L. Then next one, stock on 31st March 4,55,000. This is the closing stock. Okay, closing inventory. Where we should show the closing inventory? That closing inventory should be in balance sheet asset side. Okay, under current assets, that closing inventory of 4,55,000 should be in balance sheet current asset side. Then that's all with this. All the informations are given, considered. So now you total the individual schedule: shareholders, non-current assets, current liabilities. Like as here, non-current assets, current assets. Then all the individual schedules should be finalized. Then total of the balance sheet is supposed to be tallied. Both the sides we got the total figure of 42 lakhs 72,500. Okay, now the problem balance sheet is tallied. Now it is okay. This is qualified for essay type question. Please practice the problems like this. You can expect this type of a problem for section C.